What's up, buddy?
Just recovering from a food feeding frenzy and a bunch of sports watching, a couple of days at the casino. It's an exciting Thanksgiving weekend, that's for sure.
Oh, casino action, huh?
Yeah, I did a
Nice.
400x on Thanksgiving morning, actually, um,
Awesome.
perfecting my crypto trading skills on the craps table. Yeah,
I was I was just downstairs here at Decentral watching a guy who's got actually a really interesting project. I sent him a message to try to get an interview with him this afternoon.
yeah.
It's called Candy. Oh, what the hell is it called? Candy. Hold on, I'll get it for you. Candyclub.io. But his model is actually pretty cool. They partner with projects that are having difficulty with funds currently, or uh, are trying to build more communities. So it's a casino, but
Your voice.
it'll take any token that's traded on the major exchanges. Can you hear me?
I can't hear you well. I don't know if anybody else is hearing like a big kind of staticky sort of
Fuck.
white noisy thing. Um,
All right, let me try dropping my audio coming back. Hold on.
it just has that garbled sound.
It's the Bluetooth, I guess, is bad. Still bad.
Yeah,
Let's try switching to the iPad microphone.
that sounds better already.
Can you hear me?
Yes, I can.
Are you getting an echo from me?
No.
Awesome. All right. So yeah, everything all the equipment I brought is a total waste. I'm just straight out on the iPad. Um,
Smart.
so anyway, he's got a VC group, I think, originally out of China, based in Hong Kong now. Anyway, this Candy Club concept is pretty cool. It allows you to they'll take any token
Hmm.
and allow people to come in and use it in their casino, and then they burn 50. I think he said they burn 50% of the tokens that come in to reduce supply for the projects, and then they provide 50% of the revenue back to the projects. So, and they can set up things like poker tournaments and casino tournaments and that kind of shit in the app for the project. So, anyway, I'm going to try to talk to him this afternoon. Looked like a pretty cool thing, and he actually, I can't tell if he funded the project or it's his own project. It sounded more like it was his own project. But he funded it because in 2017 through 2019, he started buying up tokens from projects that were in trouble and flipped those then after some of them recovered. So, bought them at a discount, whatever. Anyway, pretty interesting guy. And I'm going to see if I can get him on for an interview and we can
Yeah.
play it for tomorrow's show. Anyway, I'm at Decentral, the Decentral conference here in Miami. Pretty NFT focused, but there are separate tracks for DeFi. But I'm going to go down to after the show today and a call I have this afternoon. I'm going to go down to the floor, meet some folks, see if I can do some quick interviews with some people, and have those ready to load up for tomorrow's show. And then tomorrow I'm at a conference called Web3 Miami, which is institutional focused, and the folks at Stacks Foundation, one of the VCs that was the primary investors in Stacks, asked me to come down. So anyway, hey Shizzy, thank you. Shizzy says, welcome back, guys. Ronora was telling me that we had static, but now says I sound better, so that's awesome. Appreciate you guys being here today. And Joe, we have another. You know where I'm going to be doing the show from next week?
Where?
A cruise ship.
Well, they got good Wi-Fi on those cruise ships, so that should be good.
Yeah, hopefully it's fast enough. I may have to do audio only. We'll see how it goes. But yeah, remember my wife and I bought a cruise for the family before COVID. Couldn't take the
No,
cruise.
that's right.
And we had enough credits. I guess the prices had dropped enough that we got 2 cruises out of credits, but we had to use them before the end of the year. So
Oh yeah. Well, I suspect they're going to be giving away more of those.
Yeah, it's going to be interesting to see what life on it's kind of our test of life on a cruise ship, if I can work from a cruise ship. So we'll see how it goes.
Yeah, I'm sure you can pull it off, dude. You could work from a car. If you could do a car, you could do a cruise ship.
Oh, exactly. I work from a really ugly conference room at the James L. Knight Center. So,
Is that the same place we were at last year, or is that
No, last year we were
Oh, that's downtown. Yeah,
Yeah,
I know where
this
you
is
are.
downtown, but it does not. It's a big grody, man. I got to
It's
tell
the
you,
original one. Yeah.
it doesn't represent the city of Miami well.
No, it's that part of downtown that I think it was there first. They put up maybe is it a Hilton or a Marriott or something right next to it, and or Hyatt Regency maybe. And then it was one of the better places, and then now it's just all kind of run down and sort of mildewy.
Yeah.
But I know that feeling, and it's not like you're over at Beaux Arts or Epic or one of those fine 5-star style and places that Miami's known for.
Yeah, exactly. So to everybody watching, we're not going to have a lot of on-screen activity today because I'm on my iPad and Joe's on his phone, and neither allow for screen sharing, unfortunately. So we will be talking through the stories, but there was actually quite a bit of interesting activity this weekend. But first, have you looked at prices yet today? Have you seen what's going on? I haven't looked.
I saw like 16.5-ish for BTC, and I think ETH was in the 11.50-ish range.
Okay.
But I haven't looked in a little bit. I mean, all the stocks off. Everything's going to be off for a bit because everybody's waiting out China now because they have massive COVID infections. Well, they're taking lots of, I mean, they have no immunity basically with these lockdowns, and now it's getting ready to rip. So you look at the vaccination rates for the over 60s. I mean, there's going to be a lot of dead people over there. And that's going to shut the economy down again. Everybody's been waiting for the economy to open back up, and I think it's going to shut it down again. But, hopefully it doesn't play out that way, but it's not looking good.
Well, there were a lot of stories yesterday that mass protests are happening all over China. It was kind of spurred by a building fire where people were locked down because of the zero COVID policy, and people are starting to freak out. So the interesting thing, I read an analysis yesterday that said a guy who's lived there for 30 years, he's a China analyst, and he said he's never seen anything like it in terms of the protests and the fact that it's a mix of all people. It's not just labor. It's not just students. It's like this mass of all kinds of people. And it started off as kind of the zero COVID thing, but it is now morphed into attacking the CCP, attacking just in general the policies of the government, et cetera, et cetera. And he said it's the first time he's seen protests where he wasn't sure that they'll necessarily shut down very quickly because they're spread all over the country. And that for some reason, the Chinese government is kind of letting communications about them happen. One of the theories is that they will that they're going to let everybody blow off steam, and then that they're hoping that these things will just die off, and they're not going to do a full-blown crackdown and cause martyrs. But who knows? We'll see what happens. But yeah, the whole it's funny how the whole market is kind of waiting on what happens in China between the COVID spread and the protests that are going on.
Yeah, you're pretty staticky still, but the thing is that look, these protest sizes are very small right now, but the fact is that everybody's pissed off about being locked down. And when that fire happened, I think 10 people burned to death because they wouldn't let them out. Yeah. So I think the question is how long this goes. Usually, if you look back to Tiananmen Square, and I've been there for other protests as well. Not counting the Hong Kong stuff a couple of years ago, but I've watched all these protesters show up. And, they're all polite, and then the cops come, and the cops just guide them onto a bus and drive them out into the country or whatever. And they don't protest. They don't do anything. They just get guided around like they're a bunch of sheep. So, but that's something more economic. That's like, somebody seizing their village and burning it to the ground to build condos or something. Right. This is something that's more about, I think it directly impacts on Xi, and what they're doing is, calling for him to go. But again, it's a big ass country, and we don't really know how many people this is. And I think that what you said is true because they're watching Iran and what Iran's doing, killing kids and stuff everywhere to deal with their protests. And they know that, Iran's on the expiration date clock at this point. And China wants to stay off it while all this shit settles. I mean, because they're the easy target. So, they want to lay low and try to be nice. But we'll see. I kind of want to see what happens because I remember here when everybody was arguing about lockdowns. I mean, nothing like this. Our lockdowns were nothing compared to this. But this extreme lockdown didn't work because nobody has any immunity. And their vaccines, I mean, they're okay there and they export them around the third world, but nobody wants any of their vaccines either. So they don't work is what I'm hearing. Efficacy rates of, say, Pfizer, BioNTech, and all those. So that's what everybody's looking at. I don't know what's going to happen, obviously, but it's not looking good.
No, it's looking like some disruption. Can you hear me okay?
It's still kind of a little staticky, buddy.
Fuck.
But that's the big thing. That's
video.
Your video's already off. Oh, it was off already. So that's the big thing. Of course, all the other political stuff, but I think that we're kind of in this sort of dead zone right now, or a lull zone, where I don't see any big macro stuff that can really move it at this point. And I see all the China overhang just coming out of the holidays. I don't know what happens this month. I mean, sales were supposedly pretty good over Black Friday, Cyber Monday, all of that, from what I heard. So consumers are spending, or someone's spending. But we're kind of at that point where, something new has to happen, some new event. And unfortunately, it's not going to be leading out of crypto and DeFi at this point. I just don't see it.
Yeah, I don't see any way that's going to happen.
Yeah. So, but this comes back to the thesis. Look, I did see some interesting, exciting stuff on Phantom. It looked like everything else was down, and the Phantom stuff seemed to be trickling up. I think you had a clip about that. What was that? Yeah.
So Andre Cronje put out this piece called "Phantom: An Inside Financial Peek at Being a Crypto Company," and I was fucking floored by this piece. And I said in my tweet about it, I've been really harsh on Andre and his attitude and his lack of apologizing to the community for the way he left it. But I got to tell you, he and the rest of the leadership team have done an unbelievable job of managing the funds in the treasury of the Phantom Foundation. Because he walks through, like in June of 2018, they raised $40 million, mostly in ETH, when ETH was at $450 to $700, right? And then in December, they sold all the ETH because the market was dumping, and they ended up with less than $5 million in stables in their treasury, right? So they had big exchange. They had $3 million in listing fees for exchanges, $500,000 they paid to influencers to talk up Phantom, and because of that, they decided to never to do that again. But that then leaves them at like $1.5 million left in the treasury for in 2018, 2019 for a blockchain, that needs a lot more than that. The bottom line on all of this is that over the course of 2019, 2020, and through 2021 and even 2022, they have managed and invested their money well enough to not only have a ton of money in their treasury now, and I'll get to that amount in a minute, but also rather than selling any of their FTM tokens, they've been buying up FTM tokens on the market. So they had their burn rate in March of 2020 at $600,000 a year, and they were earning 20% APY on the $3 million they had because they've been doing some other things to earn more. They started investing in comp. They invested in CRV when it came out. Anyway, the bottom line is they are now in November of 22. They have acquired or accumulated 450 million FTM. They have 100 million in stables. They have 100 million in crypto assets and 50 million in non-crypto assets. Their burn rate is $7 million a year. So they effectively have enough money on hand right now for 30 years operationally with the current level that they're at. They also have ongoing revenue because they run 9 validators. That earns them 4.1 million FTM a year. They have delegated 60 million FTM to Phantom validators. That earns another 4.1 million FTM a year. They get network revenue, so because they earn 10% of all transaction fees, and they have average daily transaction fee. They earn about 1 million a year in FTM from that. The DeFi revenue, Phantom earns 5.9 million from various DeFi strategies across Phantom and Ethereum ecosystems, and they currently earn greater than 10 million a year total in excluding any capital gains. So they're cash flow positive. They're scaling up. They're adding team members. They've got 30 years of burn available to them. I was just totally blown away and impressed with how much they had done to sustain this foundation. So as much as I criticize Andre on this show, I am completely blown away by their kind of fiscal approach to how they're building Phantom.
Well, I think the key is that, it's running like you run a business. Revenue lines, cash flow, contribution margin, operating margin, profits, investments, all of it, and publishing data like a public company, I presume. That's the way you got to run these companies. Otherwise, you get into these, you get into what we know can happen if you aren't sharing this information or managing it properly. There was a really good, so Andre, get on Geist for me, buddy. I need a winner going into the fourth quarter. So help us out. We'll help out. We'll help there, pal. All right. But can't the developers do something? But doing my little BitBoy channel there. But it seems to me that this is what we've been kind of hitting on this a little bit, despite the the little bit of concern we have about Andre. That when you look at AVAX and Solana, and say the other layer ones, and I'm not talking about the layer twos, Phantom's looking pretty darn good in that mix right now.
Yeah, man.
Both at valuation, what we're gonna, that's what I'd love to do is run a real valuation, a real discounted cash flow valuation off of their. You sent me that link, right, on the Phantom stuff. Okay, I'll dig in there. I want to do a real valuation on what they have, and then let's see how that compares with the token market cap, because that's kind of the, we all know that's sort of not a real valuation number per se, because the tokens aren't typically valued in crypto off of future cash flows. But now we have a chance to do it. Yep. So, I'll run that out and see what it looks like, because this could be, this is the stuff institutional people want to see. This is the stuff real investors want to see, that are risk averse. Not chasers. So, obviously not all of them, because we saw what happened with, the last several debacles. But go ahead.
Yeah, of course. No, I was just going to say, I totally agree. And I think that would be really cool if we put together something like that, because I think it would be helpful for everybody to be able to kind of see that. And it would be cool if there was like, if there was like a standard way we could set up doing that. That'd be actually pretty interesting.
Yeah, I can do it on the fly, but I've been doing it for a lot of years. So the thing is, this is when we talk about interest rates, risk-free rates. It's a key component of the valuation equation. Two things are that, and the average S&P 500 index return is the other piece. Typically when you add the risk-free rate with the market risk number, which is the stock number, you get the discount rate or the cost of capital for valuing something. So again, traditional risk-free rate has been 6%. It's close to 4 right now, and I think they're going to get it to 6. And I think the S&P 500 average as of a couple of weeks ago was about 11.8%. Since maybe whenever they started tracking that stuff, 30s, something like that. So you're talking about 17.8, 18%. When I was doing startups and, valuing for VCs, I would always be discounting by about between 18 and 22%. because you got another thing in the calculation too, which is the beta. And, beta is a not to understood concept, but it also factors into valuation. So I guess what I'm getting at, Brad, is it's always got a little bit of art to it, versus just strict, interpretive, unless you're valuing a business like a heavy asset business, like a dry cleaner, a car wash. Those are different because exactly what you have. It's not like where you're betting on the future in, say, an early stage tech opportunity. So those other ones you can do more rote, but these all, because you're really, you're kind of trying to create something in the abstract that an investor will regard as real and tangible. And so that's when you kind of can move those levers around a little bit, beta in particular, to sort of move those discount rates. Like, let's say you were projecting out, and there's also a terminal value at the end of the 5 years. It's like from the year 6 to infinity. And there's a value of that, because the business doesn't stop making money. It keeps going. So the value is all the money coming back. And, so to me, it's like, that number can get way too big, residual value, if you're not careful. And so you have to, you wouldn't say in the residual value number, terminal value number, you wouldn't be saying, continuing growth rate of 35%, even if it's growing at 35% already, because it's eventually going to stop. And it's going to stop closer to this time period than it's going to stop closer to the infinity endpoint. So you basically, can't use projections that high. So you basically just default back to, say, 10%. And then you can manipulate the beta number a little bit based upon risk to sort of determine how heavy the discount rate is going to be. So let's say your cash flow is just too high. It just looks like you're going to make too much money and nobody's going to believe it. So what you do is ramp up the discount rate so it hammers down the valuation. And then you're trying to always find that optimistic projection and bring it back to today so the investor sees value, that they're getting in it not late, but they're getting in early. And so you kind of tweak those numbers a little bit to fit what they, what their sweet spots are. So it's hard, but I think we'll do this, on the Phantom, and then we'll see what we can do in the others. But this might be a good way to start up a template, Brad.
Yeah, it makes sense. Totally.
Because they're running revenue. It's not a startup. It's got assets. It's got revenue. It's going to have a nice terminal growth rate. I mean, I think it's going to be, what is Phantom valued at right now in the market? About, I think, 600 million or something like that.
Well, I think TVL's at like 500. I don't know what the market cap is right now.
Yeah, let me just go see if I can find CoinGecko real quick. FTM. Okay, I'm looking at what we call market cap in crypto, fully diluted valuation, 638 million.
Nice.
Current market cap, 510 million. We got, it looks like 2.5 billion circulating and a max supply of 3.175. So I like that too, because you're not sitting there with 10% of the tokens out already and 90% more distribution or emission or whatever you want to call it. You don't have that dilution. You already have, it looks like about 85% of the tokens out. So you're not going to, in a real, say, valuation conversation over, say, equities, when you issue more shares, it dilutes the value of each share of stock, obviously. Well, tighter valuation rules there. Here, we're just kind of saying, okay, someone buys a token for 20 cents. There's 3 billion tokens. Here's the valuation. But in equities, it goes the other way around. You're first valuing that token properly or that stock properly, as to what is its real value, not what the price is, but what do you think it's really worth? And then you're multiplying that times the number of shares. So the cash flow is already baked into the stock price. We just don't have that in crypto yet. It'll come. It's coming. And stuff like this is key.
Well, and I think, too, not only the managing of the money, but look, the new version of their virtual machine, the FVM, is coming out. I just read a piece he did that gives a really, I'm going to put it in the show notes, does a really good job of explaining at fifth grade level how their consensus mechanism works. There's a lot of innovation happening there, and I really think that we've both been fans of Phantom in the past and the projects on Phantom, and I will tell you that I've had conversations this morning with people in Phantom, and then yesterday I had conversations with some of our friends that have projects in Phantom, and all of them are looking to deploy on other chains, but all of them also haven't given up, hope on Phantom. They just feel like they have to cover their asses, and of course that makes sense. But I got to tell you that I had, when I saw that piece yesterday, I tweeted about it. I really had a switch flip for me of kind of starting to write off Phantom a little bit in my head, to being one of a lot more persuasive. I feel like the foundations are really strong there, and I love the fact that they have this runway that gives them an opportunity just to build and innovate. And I think, look, the biggest thing for them now is biz dev, right? On the fundamental side, they have got to get their act together on the incentives, and they got to get their act together on securing deals. And if they can pull that off and get out there and make those deals happen, they're going to be in good shape. I mean, look, they're getting shamed. Everybody in the industry is getting shamed by Polygon. I mean, you just can't. That's a fucking machine, right? But I think it's all doable. Like, you and I have done, I don't know, between us, hundreds of biz dev partnership integration deals.
Yeah.
And
Yep.
we know what's possible, and we know how to make these things happen and how to make them move. So I'm confident that if they have the right people executing the deals, they can make it happen. And Phantom has a big future if they can start making it happen. So.
Well, you hit a really good point. Look, between you and me, I tend to work partnerships more in the traditional world, more in tech and in finance areas, into crypto or tech, but also a little bit in, platform to platform. But, you're out in the field talking to a lot of the new protocols constantly. So you have a good presence in that space that, can identify good partnership opportunities. To me, it's more about how do you get more TVL on the platform? Right. So you stem this exodus of people that are starting to look. I mean, be the center of multi-chain platform, of all of it. But, and I think I know, we don't want to say who, but, some of the protocols we talk to there, it's makes strategic sense for them to have a presence on other chains. Right. Because at the end, when chains survive or die, people are going to be looking to flow to the ones that are surviving, right. In my mind. So I think that's smart. I mean, I think that, look, where Polygon's killing it is that they got kind of let's put it this way, a lot of like investment banker type people running around in their back office putting deals together, which are a little more mechanical in how they go about it and getting targets and sourcing and talking. It's not as artistic as, say, the way that, it's not as creative. It's just execution. And I'm not saying it's a negative. Some people go out big game hunting, and you got to like really shape a very big deal together for a while and get everybody's heads into it at the right time. And others just go out and just do bulk. And it either, they both have their place. And I think, with Polygon doing what they're doing, they're grabbing the whole market, or they're trying to, as much as possible, and trying to maintain their position. But, I could see a world where something potentially goes wrong on ETH or, their layer 1s and 2s, or Solana, for example, and people are looking for other options. Phantom comes across as, to me, the fast one. Is, it has the speed to handle all the transactions. It seems stable to me. It seems like it's around for the long haul. It doesn't seem to get involved in hype. Now, I'm not big on all the naming of the protocols. I don't like the whole Halloween theme myself, but I get why people do. So it's not a deal breaker to me at all. It just kind of makes the institutional guys go, "Wait, what is this again? Is this a kid thing or is this for real?" That's my only thing. And that's strictly TVL and money and trust. It doesn't mean anything about the underlying functionality. So
here's where I think the real difference lies in approach to biz dev and partnerships. And it's, look, I mean, my whole career I've been able to do a lot of partnerships and integrations with in tech because I have an understanding of the tech, right? A lot of these chains and protocols are hiring people to do biz dev who are great salespeople or negotiators or deal makers, but they don't understand the connections and the hooks. And when you're
Right.
running a chain and you want to bring in protocols, you want to have them be able to, you want to say to a partner, not only am I going to bring you in, not only am I getting you incentives, but here's what we're going to do out of the gate. Here are 3 projects in Phantom that are going to feed you TVL. They're going to feed you customers because you're going to integrate, because this is why it makes sense for you to integrate from a technical perspective, a financial perspective, and here's why your tech will work well with projects A, B, and C. And that, to me, is the key to success in this space in terms of integrations and these projects and these partnerships. So I hope we see more of them. I hope we see more of that coming out of Phantom, but we'll see. Shizzy said, Phantom started the bear market after Andre left. Can Phantom start the next bull with Andre returning? Well, I mean, I think we can hope so. Now, I will tell you this. I learned from some folks at the Fountain Foundation and within the Phantom ecosystem that, in fact, Andre never actually left. He was there. He was always working. He's been writing code. He's working behind the scenes with the team. He just wasn't being front-facing. He wasn't putting out memes. He wasn't talking. And I think he was a bit embarrassed. It's funny. I talked to somebody this morning from the Phantom ecosystem. We were talking about him and this piece he put out, and the fact that, you know, I said, the only thing I'm waiting for Andre to do is to do a proper apology. And he said, if you know Andre, you shouldn't hold your breath for a proper apology. It's not coming ever. I said, okay,
Yeah.
well, you know what? If the man keeps doing the work behind the scenes, that's fine. I'm not a fan of his regulatory appeasement stuff, but whatever. Niblet said superior tech is only a small aspect. QWERTY keyboard, VHS, even internal combustion engines had inferior tech, but won the winner take all games. You're absolutely right. You know, we weren't using beta tapes for very long. My family bought beta, but you know, we ended up with the unusable shit. So you're absolutely right, though, Niblets, that superior tech doesn't always win. There have been plenty of examples of that in history.
No.
And that's just the way it is.
Yeah, you know what? I'm trying to remember Betamax. So that was Sony, right? Sony Betamax. Yeah, that sounds right. So Sony had just come off the big Walkman product, which was the first kind of headset music. I think they were radio first, and then they put cassettes in them. So they went from there to, you know, another consumer product and got beat out by the VHS guys. Right. So it's kind of interesting. Like, they were riding a great, you know, it was like the biggest consumer product of that year, the Walkman. Everybody had one. It was like a smartphone, basically, that much distribution. And so they kind of hit on the consumer piece, the retail, but then missed it on the next one. And there was a pretty interesting story with that, if I remember. It was like, weren't there like 10 VHS competitors and like just Sony? And they were all, they basically just defined the new standard.
Yeah, I think there were a couple of partners for Sony, but primarily it was Sony trying to drive beta because they had so much consumer electronics market share. And then Nibble says beta is still used by news orgs till digital won a niche but lost the war. Yeah, Sony had Betamax in news orgs, I guess. But anyway, yeah, look, I mean, at the end of the day, there was a coalition of people on the VHS side. And I think one of the key factors there was the media, right? They got the movies on VHS more than beta. And so there was more capability. And I think there was also something having to do with Blockbuster and movie rentals.
Yeah.
Also drive a big part of that. I don't remember the whole story.
Yeah. No, you're absolutely right. I worked in a rental store in Chapel Hill when I was in college. And I remember there were no Betamaxes at all. This was, right. You know, well, I'll date myself. This was, you know, mid 80s, we'll call it. But, you know, there was only VHS at that point. Yeah. And there were CDs and stuff like that. I think CDs had already started, but it was not like, it hadn't gone to the full-blown digital stuff, obviously.
Niblet makes the point, internal combustion underperformed steam at first, and there were even electric cars back then. That's absolutely right. I just read something about that a couple of weeks ago. He said, but they partnered with oil to win the game, right? So the distribution of the system for powering the vehicles actually allowed internal combustion to win out over steam and electronics.
Yeah, well,
Imagine
this is this is the BD deal you're talking about, because that deal on internal combustion was, I don't know how many people know this. I saw it somewhere years ago, but when New York City was lit by kerosene. And so when all those original big oil fields that Rockefeller controlled that were in eastern Ohio, when all of a sudden the New York market, and they would be shipped to New York on rail, I think those rails were controlled by JP Morgan. And so there were all these trade outs, so you could control the market. And so every bit of kerosene being done in New York was by Rockefeller. So then, then there's the electricity wars between Tesla and, I get them all mixed up, but like Westinghouse was in there, and Tesla and JP Morgan and a couple others. They brawled over that, but it was to do the electric lighting in New York City. So when the electric lighting happened in New York City, because there was a problem with a lot of places still burning down from kerosene, evidently, then all the oil guys were like, what the hell do we do now? We don't have anything to do with this oil. And so they figured out petroleum jelly was the first one they came up with. And everybody's like, well, yeah, that's interesting. And then they came up with gasoline, which was a byproduct of the kerosene manufacturing process. And so then it's like, okay, what do we do with this? And so then the car guys came together, and it was like, there were like about 10,000 car companies back then in Detroit, Chicago, all over the north. I mean, there's some down in Birmingham and Atlanta, places like that, but all different engines, steam, electric, everything you could think of. And then boom, here came the gasoline, and it matched perfectly with the combustion engine and, auto industry, which nobody thought of when they were like lighting kerosene lamps in New York City in 1885. They weren't thinking about that, or when they were putting them out. But here we go. Here's just like kind of like we talk about .com and .com crashes and what comes out of that. Obviously all the YouTubes and Googles and Facebookies, but this smartphone that we're streaming through right now, this supercomputer in our hand that, everybody had a phone, but nobody kind of thought about it turning like this, or very few did. And now we have this whole new industry of everything driven off smartphones. That's bigger than cars, I think.
Yeah, absolutely. I totally agree with you. Totally agree. I got a few more pieces of news to cover. I've done while you were talking, I did some screenshots, so I'm going to try loading them up.
Cool.
So we'll see what happens. I can't do screen share, but I think these uploaded screenshots will work. So, it's all right. Cool. It's overwriting your face. That's even better.
I can't see you either. It's a win. It's a twofer.
So this was pretty epic. Wall Street Journal had this piece out yesterday, an opinion piece saying centralization caused the FTX fiasco. Automated market makers can obviate the need to hold customer money and the opportunity for fraud. So, when that's hitting something like the Wall Street Journal as an opinion piece out of the journal's editorial pages, that says to me that while the FTX thing is a total fucking mess and going to cause some harm to the ecosystem overall, that people figuring it out, this message that centralization is the cause, is exactly what we want for our industry. So I was really excited to see a journal piece coming out and saying that. As much as everyone hates the mainstream media in this space, the fact is it drives opinion. And when you have the Wall Street Journal saying this mess was caused by centralization and crypto and decentralization can solve it, that can drive a shit ton of narrative in Congress, in the financial sector, in the system. And so I'm hoping we see a lot more of that.
Yeah, it's interesting because I'm trying not to really pay attention too much to this anymore, but because now the regulatory battles are fighting are occurring because, Sam was really close with the CFTC chair.
Yeah.
And so now, but he was close with everybody. So now they're all battling out who was this and whose fault it was. And in reality, I don't know if you still read Ben Lilly's stuff over at Jarvis Labs, but he put out a really good piece on 3AC and how it came out, I think, yesterday or today, how it all starts back in December of 2020 after DeFi summer and what happened there. And particularly, there's a really interesting grayscale angle there. Because 3AC and Shuju, I think, that's his name, right? Yeah. He was basically staking a a bunch of BTC. How did he do this now? And then he was buying GBTC shares with the borrowed funds. And they were saying he was single-handedly driving the discount in Grayscale. And so when Grayscale would do that distribution and everybody be dumping the Bitcoin, a lot of it was him. He had like 125,000 BTC in there or something. So that first speculative bubble created what Sean talks about, that phantom collateral. Yeah. And it just, I mean, right after that, you saw what happened. We were all loving it. Yeah. So it just kept where the trouble started. And then when it kind of got in trouble, and then how it led to Terra and all of that, and then how it led to Alameda, and some interesting stuff on Alameda's bets early, whereas they were something about, they were in a position where they would create the market and support the price at the same time by them being listed over at FTX. So, it all kind of spun out of this very first stuff in DeFi Summer 20. So read that article, and everybody, it's like 5 pages. Jarvis Labs, he writes good stuff.
Joe, send me the link. I'll put it in the show notes.
I will do. Okay, because there's a lot of the GBT, because, I've been looking at that because I've been looking at that GBTC trade where it's like at a 42% discount to the price of the underlying BTC. And the theory is that, if it gets the spot ETF approval, that 42% zeroes out and you're pocketing a 73% gain. But, why isn't GBTC getting that ETF approved? I mean, I don't get why I don't know why it's taking so long. And I know it's spot and everybody's concerned, but there's ways to hedge and protect and do all those things that shouldn't have the regulators this freaked out. So if you bought the GBTC now, you're betting on that approval. That's the whole bet. But what's interesting is when you see how that effect that we always traded on wasn't even a real, I don't want to say it wasn't a real thing. It was a real thing, but it was being, it was a game going on. Yeah. And none of us really kind of appreciated that at that point. So lots of good stuff to learn. Mm-hmm.
Yeah, Eamon says, back to that Wall Street Journal piece, that's the kind of news we need, anti-centralization. Totally agree, Eamon, definitely. There was this piece. So here's some more collateral damage, though. An FTX customer that lost $750,000 from the collapse is suing the Golden State Warriors because FTX was its official cryptocurrency platform. So I guess he's going to make the claim that because the Warriors told him to use FTX and he lost his $750,000, it's their fault that he didn't read the disclaimers at the FTX website. So,
yeah, well, this is the stuff that, these nuisance lawsuits. I mean, look, if you put $750,000 in FTX because the Golden State Warriors told you to, you're a friggin' dumb shit, okay? Flat out. And you don't deserve a cent for that, okay?
Exactly.
And if it was the whole stack, you're even more of an idiot at that point. So I think people just FOMO in, don't think, and evidently a lot of people were doing that. But you can't then come around and go after the people who are the the advertising spokespeople for it, because they're not saying it's all going to work out and, token go up and shit like that. They're just pitching the exchange and the concept. And the concept was good, I thought, man.
And there's no way this guy's going to be able to prove that he assumed that the Golden State Warriors did due diligence and they weren't paid for making that choice. I mean, it's this was sponsored. This was an advertisement. That's all this was. And that if they say official sponsor, then it's sponsored. It's paid for. It's not something that the Golden State Warriors said, oh, we've done full due. I mean, do you do that if the box of tampons you buy don't work properly? Are you off suing Tampax because, some television show took advertiser money for it? I mean, it's just stupid.
But what it's like is DeFi Llama coming in and sponsoring our show. Then DeFi Llama does something stupid, and then everybody's suing us, because we let them sponsor us. I mean, if I'm not mistaken, FTX is it's an arena deal or a team deal, right? I mean, it's they got logos on the court and stuff. Yeah. So you're when somebody's coming in saying, I'm going to give you $50 million to put my name on your stadium for 20 years straight, I'm going to give you $50 million. the only due diligence you're doing is, do they have the money at that point? You know, it's not your
check clear.
Yeah, you don't have any obligation to do any due diligence on that, other than, as Brad said, did the check clear? That's it. So anybody else, hard cheese, man.
Yeah. This is a stupid story. I'm not even going to bother. But it just cracks me up. Miami nightclubs mourn absence of high-rolling crypto entrepreneurs. Good fucking riddance. That whole scene. Look, I hate to see small businesses suffering because the crypto millionaires aren't out buying $500 bottles of champagne. But, that's all of the shit that we need out of the industry. So good fucking riddance. I hope they're off licking their wounds and, working in another industry. So did you see this? That FTX owned an $11.5 million stake in a rural bank. The crazy thing about this is this rural bank is like this little shack, literally I don't know, 800 square foot building. And they never had deposits over $10 million. So FTX puts in $11.5 million and 10x their overall valuation for this little tiny fucking bank. I can't wait to see the disclosure of the communications about that deal.
Yeah, I mean, look, that's just, what you're buying is the banking license in the U.S. But just because you got that 11, I'm surprised that they pulled the trigger at 11.6. I mean, I would say you pull the trigger at 9.8 or 9.9 because I don't think you have to report, or the SEC reporting is different than once you go over, or the, whomever you're reporting to, FDIC or somebody, man. It's like once you hit 5%, there's certain rules, and once you hit 10, there's certain rules. So you usually come in under that. But the point is, look, if you have that license and all of a sudden you can drop $5 billion into it, then you've got 50 branches up, or maybe your branches are all virtual, or something. I don't know, but. Maybe you got a branch in, one of the metaverses too, physically looking thing. You could do all kinds of stuff with that. But I guess he's a U.S. citizen too, right? SBF, he's U.S. So so that's why you could pull it off. Foreigners can't buy those banks without a lot of lobbying.
Yeah, I mean, look, I guarantee you, he just figured, you know what? I'll buy the controlling interest of this bank. I'll position myself that maybe I can negotiate with the federal government to take that license, and either the bank acquires FTX or FTX acquires the bank, or there's some other way of rolling this in so that now he has a banking license. And I'm sure that's what the thinking was. Hey, what's $11 million when I'm printing billions of dollars? So I'll fucking buy this. But I have a feeling some more is going to come out of that. We'll see what happens. So
as they untangle this mess. I mean, it's I'm just shocked, honestly. Again, I'm not trying to focus on these guys anymore, but I'm just shocked at the lack of oversight by Sequoia, SoftBank, and all those groups that put money into it. I am actually completely shocked. I'm not shocked at them hanging out in a $29 million apartment like rabbits, in a total mess. I mean, because I kind of always suspected that, that because we've seen all these companies, who's got the ledger? It's basically and they're just not structured the same way, which is great when you're doing edge innovation and things like that. But when you're taking custody of other people's funds, I'm sorry, you got to follow the rules at that point, because it's, the rules are there to protect everything, protect you from using investors' funds when you shouldn't, which is what he did. I mean, it turns out he is making a lot of mistakes that I didn't even anticipate him doing. But things like that are, there's a reason they put walls up between invested capital and, the play money or the bet money is so that you don't go on. I mean, the whole example is, again, craps table metaphor. It's like, when you go up, you take off what you started and put it in your back pocket. And so you never go in the back pocket. And if you lose it all, then you lose it all, but it's still house money. So when investors give you money, that needs to be locked away in the back pocket, basically. You can't use it for things. You can borrow against it appears, but you can't directly invest it. So, I mean, you could take it in, I think, ethically appropriate if, let's assume everything was insured and let's forget about the rules. But I think you could take that and you could put it in places like, Aave or Curve or, even like some people were probably in Celsius too. I wasn't. But the point is, you got to go get yield.
Yeah.
That's what the banks do. But the banks make the money off of lending it to people like us, and they only invest in risk-free, shitty yield, but it never goes, it doesn't lose. So, because it's customer money. Unfortunately, holding customer money and, slinging it, for the moon on moonshot type stuff isn't consistent.
Exactly.
You got to have your risk-free stuff, and you got to have your, going long stuff. And otherwise you get in trouble. And, so again, I don't see SBF and these guys as being these criminal masterminds. I see the fact that they grew super, super fast. And when they didn't, you become like sort of getting a little hubristic at that point. It's like, I thought I was a total fuck up, but everybody's giving me $4 billion. I must know what I'm doing. And so then you keep going. But it's exactly those guardrails that would keep you from making those investments, but would also secure the investment money or the invested money. And that's kind of the contradiction here. When I'm looking at crypto, go ahead. I'm sorry.
No, go ahead.
Oh, no, when I look at crypto, to me, again, it's even with stocks, there's one thing to go bet the S&P 500 index, put it in, forget about it. Another thing to go buy I-bonds at 6.49%. Put it in, forget about it. It's it's the least risky thing out there at 6.5%. But buying individual stocks to me is the same as what we do over here in crypto. We're trying to pick winners.
Right.
But that's risky. That's risky, and no one is perfect at it. So
Yep.
I guess to me it's that. You either go into risk-free or the least riskiest guaranteed returns if you want to forget about it. But everything else in crypto to me is about trading. It's not about investing in, except for maybe Bitcoin or something like that. But it's not about investing and forgetting about it for 20 years. Because you can't.
Yeah.
So to me,
we're not there yet.
Yeah. But it's just because of the volatility, We just don't have, it's the trader paradise, basically,
Yeah, and look, if you go back to the main point, which Niblitz makes here very well, he said that's the problem with derivative metrics. No one knows what is really driving them. So well-positioned players can game entire markets. Decentralization and blockchain mitigate this, right? If everything that SBF was doing was on chain, there would have been a lot of red alerts prior to that. The due diligence by the VCs, everybody else would have been a hell of a lot easier if everything was visible, and it wasn't. So quick note, I got to jump here in a minute, Joe. But,
yeah, sure, buddy.
The guys at DeFi Llama have, dude, these guys just keep, I say this every fucking week. I said to the founder the other day, we're going to have to devote one day a week to just DeFi Llama releases. DeFi Llama updated their chain list and now will tell you which RPC nodes collect your IP address and other information and which ones protect your privacy. So when you go to connect to RPC nodes, go to Chainlist first to get the RPC URLs so you can protect your privacy. Of course, the best thing beyond that is setting up your own nodes and virtually hosting it and doing it that way where you have control over it. Nothing's being tracked. But in the interim, folks like Anchor and some others do not track IP addresses, and you can check the score ratings at chainlist.org to see whether or not they're invading your privacy.
Another reason to use a VPN, guys. Come on.
Yeah. Oh, yeah, that's true. That's absolutely true. And then DeFi Llama over the weekend launched trending contracts up to 60-minute intervals. So essentially, this is a list of contracts that are having either the most active accounts, the most account growth. You can track by transaction growth, how much gas is being spent on the transactions, etc. Currently, it's only ETH and Arbitrum, I believe. But he said they'll be adding a bunch of other chains soon. But it's a great way to find protocols or NFT projects, et cetera, that are trending and that are getting a lot of attention, right? Because you can go in then from here to Etherscan and see what they are and what they're doing. It does take a little bit of detective and legwork. I'm sure they'll start adding the ability to label contracts so that people can say, oh, this is XYZ project. But this is a really cool tool to have. And the other thing this is interesting to me is DeFi Llama is essentially building out all of the data tools that Nansen and Masari charge for and are giving it out for free.
Yeah.
Now, Nansen and Masari, the view of that data is much more sophisticated. It's much cleaner. It's got better labels. It's easier to use. But I suspect that DeFi Llama will start adding some of that other same functionality. The really interesting question becomes where they end up with from a revenue model perspective. They are launching a media company. So DeFi Llama has started Llama News or something like that. I'm going to be interviewing the founder of that, the CEO of that company. But I think what DeFi Llama is positioning themselves to be is media, data, and infrastructure, because they're launching an RPC system as well. So you can host your own RPC nodes or use their RPC nodes and deploy RPC nodes. So my expectation is that they are just very smartly building out all the building blocks without making any money really from it to be a major player in the DeFi space. So I think that's why they are constantly, I think whoever the founder is just really funding everything himself out of pocket, because he's building a foundation to own a huge chunk of the DeFi landscape.
Yeah.
But anyway, we'll see.
I mean, no, but it's like, look, to your point, I mean, it's a great acquisition for like a BlackRock or Blackstone or somebody who wants to put a front end of content and analytical information that people can use to execute from.
Yep.
I mean, that's one thing I like about DeFi Llama is it really does give you actionable information that you can do things with. So, because stuff, I mean,
you could do right now to make investment decisions with what they provide, and they're not charging you $1,000 a month. You know, so
right. Yeah, when I looked at that, I was thinking about the old like Omega Research. I remember all these guys at Daytech. You know, I was in some of those deals. One of my buddies, Omega, had a big trade. I think it turned into Trade Station, or maybe that's what Daytech turned into. But there were all these kind of like tools companies out there in the late 90s. And, you know, where they put up screens. Of course, now we see that everywhere, charts and things. But to me, it's like you have the ability to basically, with all the DeFi Llama tools, if you're an institutional investor, to be able to get all the stuff you really need to execute from. That you don't have to go digging around like Brad and I do to find stuff, you know, little crooks and crannies of the landscape. You know, this gives you 95% of what you need if you don't know. So go in there, let it, you know, tease you to some targets, and then go learn off of those and get in the game. Because it's not bad information. It's good information.
Absolutely. It's all data-based. Hey, Joe, I got a book. I got a 1 o'clock.
Let's go.
But, thank you, everybody, for participating. Niblets, Eamon, Shizzy, Ronora, really appreciate you being here. We appreciate you watching and listening. Everyone that's listening on the podcast, please rate and review us on Apple Podcasts and Spotify. If you're listening or watching on YouTube, please make sure you click subscribe. Click the little bell so you get notified about new episodes. And while you're there on this episode, please smash the thumbs up button so that we get boosted in the algorithm. We appreciate y'all being here. Joe, I'll catch up with you later today. I got a boogie, but everybody, thanks so much for joining us, and hope you have a great Monday. We'll